Hello traders, so we are gonna start the live trading, the second day. Sorry, I'm a bit late today because obviously I've had a few things to do this morning. But obviously if you can hear me, like if the audio is fine, just let me know. And obviously if you can see my screen as well before we can start. So just let me know in the live chat. Yep, so do let me know if the audio is fine. If you can hear me, let me know, and obviously if you can see my screen, and we can start. Can you hear me, guys? Is the audio fine? Don't worry, guys, I'll get to all your questions. Just let me know if the audio is fine and we can get onto the okay, perfect. So I think the audio is fine, right? Yeah, perfect. Okay, the audio is fine, so we can start again. So for those of you that didn't watch yesterday's video, I'm just gonna do a little recap and just to talk you through what actually happened yesterday. And so before I do that, what I'll actually do, I'll just bring back my boxes. So if you guys watched yesterday's video, you would know how important these boxes are. But I'm just gonna draw a few of the boxes, and it's exactly the same from yesterday. And obviously we're gonna bring in our middle lines on all of them. So if you were with me yesterday, you would know that we actually took a short trade on this market. Somewhere there we took a short trade, and obviously because the market, you know, didn't cross the middle line, so we took a short trade here, and obviously the market came all the way back down there and kind of gave us a correction. Basically it was a, you know, kind of a correction that usually breaks to the downside. I was expecting it to break to the downside, but obviously knowing the fact that there's also a middle line here that could be significant, but obviously the market ended up, you know, going all the way to the upside. But obviously me and my traders, we took I took a break even on that trade, and as soon as the market goes above the next middle line, so look at the box above. So as soon as the market went above, we went long actually in this market. Somewhere there we went long, but then we had to close the trade again, just because, and I'll show you the reason why we had to do that. It's because sometimes it's always important to always look at the big picture when you're trading. And when I say the big picture, I usually mean the kind of the larger time frame, because the larger time frame always dictates where the market is likely to go in the long term. So obviously, you know, if you're taking a trade, you always have to pay attention to. So for example, if you're shorting a market, and if the market on a higher time frame is it's bullish, then you're actually putting yourself in a I mean, like, you're putting yourself in a situation where you have to be very cautious. And I'll show you the reason why, and obviously I'll show you the reason why we took a trade. We took a short trade actually just this morning, and the reason why we did that is because, so I'll try and just look at a bigger picture for you guys. So if you look at in all these places where we've got all these boxes, there's one thing that you actually gonna look at, you're gonna focus on, is this impulse leg. So you see this impulse leg that we had, but look at the correction that happened after the impulse leg. We had a 1, we had a 2, and we had a 3. So if you guys remember my 1, 2, 3 strategy, you get the 1, 2, 3. What's the first thing you're waiting for the market to do? You're waiting for the market first of all to break the outside return or the starting point. You got the starting point here, you got the outside return. So we had the market coming back all the way up there, breaking that starting point, and obviously this market also gave us an advanced pattern, which I posted on TradingView. So if you guys are not following me on TradingView, you wouldn't have seen that advanced pattern, and I will show you guys that advanced pattern. We actually had two advanced patterns that terminated at the same place. So we had a bad pattern, the one I posted on TradingView, where if you're taking this leg as your X to A leg, you're gonna have X to A leg, A to B leg. We got in the 50% retracement, B to C, C to D. So that advanced pattern gave us an entry somewhere at the top right there, and you can see the market kind of coming back down. So this is one of those situations where you have to, if you know a lot of strategies, you can easily combine strategies, because this is a situation where you're seeing two strategies kind of working hand in hand. I mean, on one situation, obviously, like I said, this is with the 1 2 3, and you had the market. This is what I usually call the trap for traders. Like, you don't get involved in the trap. We wait for the market to come back down either to the middle line or to the bottom of the channel, and I'm gonna show you guys that in a second as well. So I'm gonna delete that. I'll show you guys the second advanced pattern. The second advanced pattern is actually a cipher pattern. So if I take up my Fibonacci retracement, so let's go from X to A leg, looking at that move, then you're gonna see we got the 618 retracement and we got the 127 extension here. So that definitely gives us a cipher pattern. So where is our entry gonna be on the cipher pattern? Hold on a second. So for the cipher pattern, we're looking at the entry at a 786 retracement. Let me see if everything is clear with this. Okay, everything seems to be fine. So we're looking at the 786 retracement. So so we got the X to A leg, A to B leg, B to C, and C to D. 786 retracement somewhere there. So that actually completed a little bit below the bad pattern. Yeah, but obviously we got that is another reason for entry for going short in this market. So if I go over to there's one thing I need to show you guys again. So deleting all of that, we can also, I don't want to, I can delete all this all these drawings at once, but if I do that, it's gonna take up the ones I'm really paying too much attention to. So we can even have a much bigger box in here, and the big box is gonna come in where this consolidation is. So you see all this consolidation, you got your impulse leg here, and the whole of this, the impulse leg here, the whole of this is another consolidation, which the market has recently broke out. So we can put our box in that consolidation, and that's going to be very important for the trade that we're currently in right now. We're currently short in this market. But you guys that are watching, you know, it's still like, you know, pretty much at the entry. For you guys that want, you know, that want to trade right now, you can actually take a short on this market. So if we're looking at the bigger box here, so I'm gonna go ahead and delete all these smaller boxes, because they might be interfering with the explanation I'm trying to make. So basically, let's delete all these boxes. Our middle line is gonna stay the same here, and I need to delete that as well. So that one is usually as well. So this is the only thing that we're gonna pay attention to right now. So we got the middle box here, and the aim is this market is gonna it will come back down to the middle line. That's for sure. But obviously, what it does at the middle line is gonna determine where the direction of the market is gonna go to. So far, based on the structure that this market is put in, even though on a higher time frame we are bearish, but the structure that the market is put in right now is suggesting that this market is likely to go up. But then this middle line is going to determine what's going to happen. So once this market gets to the middle line, we will see what the market is going to do. So if this market is going to go down, we would like to see something like kind of the market to come back, break that line, and kind of settles. If it settles below that line, then we're going to keep that trade, because this market is likely to continue going down. However, if it comes in here and settles above the line, kind of gives you a spike and up, and you know, kind of gives you a buy setup, then the market is likely gonna keep going up. But the fact that I said this market is bearish on a higher time frame, there's a much higher chance of this market going further down. So, but obviously we're gonna keep an eye on that one. So as you can see, we've got the trade on already. So so we just have to see what will happen. So just gonna recap on a few of the trades that we're in right now. I think I showed you guys this this trade yesterday, but I just want to show you guys what the market has done so far. So in the GBP CAD trade, we do have a long trade that we're over almost 500 pips in profit, probably more than that. So the market has come in and gave us a low correction here, which we can bring in our box. So this is if you know how to do this. So going back to the US 30 trade that we're in right now, if you know how to play around with your boxes, guys, this gives you a much like it's easy to kind of spot where you can get in, where you can get out of a trade, where you can stay in it. It's very easy to do that, because yesterday if you don't know how to use these boxes effectively and be able to read kind of like understanding the market structure, be able to understand what the market does at every single point, it would have been a rough day. But something that could have been a rough day in the life of a day trader turned out to be such an okay day. I mean, we didn't make any massive results in terms of pips. I mean, obviously if you take the three trades that we're in, two of them, the CAD, the Euro CAD and the GBP CAD trade, then those one, of course, they're gonna give us a huge profit. But those are more like a swing trading. It's not really day trading. But when you're doing day trading, I mean, look at what happened with these trades, for example. So look at the how these middle boxes, the middle points, are very important. I mean, look at we're currently at one right here. Even that one on the top right here, you can see the market has broken above the middle boxes. So if the market settles below that box, then it's definitely gradually gonna creep into the next. The next stop is gonna be that one. So you can easily use this boxes, the consolidation, the middle point, as points, to enter trade, to exit trade, and to plan, basically to just see, because it will give you an idea. Because so many times, look at the first move we had yesterday. Why did we close our trade? As soon as the market settles above that box, we know it's gonna go higher. So all we had to do was close our trade and go long, and that's exactly what we did. We did that. The market go in, and you stay in the trade unless something changes. You don't get out of a trade. You stay on a trade unless something changes. That's how you maximize your profit. That's why you I think there's one of those rules in trading where that you always have to let your winners run. You always have to do that. It's not about taking. Some traders take their profits way too early. Take your profit way too early, and you let your losses. You do the complete opposite. But this strategy kind of stops you from doing that. You don't have to be taking your profits too early. Just wait until something changes. Nothing. So at this point in time, we stay in a trade. There's no point of panicking or anything. We know this market is gonna creep in all the way down to that middle box of the bigger consolidation, and we'll got a smaller consolidation there as well. So this market will get there. It's what the market does after it gets there. That's gonna be something that we're gonna cross that bridge when we get there. It's not something that we're gonna worry about at this moment in time. So so going back to the GBP CAD trade, because with this one as well, you can draw your boxes. I mean, you can. I wouldn't expect this market to go straight up. Like I said, this is a trap. The market is setting a trap for all those traders that the market is breaking up, so we've got to jump on the trade. No, this market is not going higher just yet, because it will do this. It will correct. It will come back down. Either it's gonna come back down to this resistance here, this support here, and bounce back up, or it's gonna come all the way to the middle of the box and bounce back up, or it's gonna come all the way down there before it takes off. So mark my words, you can keep checking this trade, because obviously I'm not gonna be streaming for the next few 5-6 hours. So because, and if you want proof that the market is actually gonna do that, you just have to look at the previous box. Let's put a middle line in the previous box. Can you see that? We have the consolidation, the market came out, we got the trap here, and where did the market come back to? Look at that spike though. It spiked all the way to the middle line and it's quickly retraced, settles above, comes back down to the middle line, and it's finally going back up. This market would continue to repeat this pattern every single time. So if you think, so it's even a situation where like you don't, so many times that you don't even have to rush into a trade, because all you have to do is just wait. Like in this situation, all you have to do is just wait. There's no point. You never panic. You never panic because the market is not gonna take. You never panic. It will always come back down. So it's a strategy that you guys, if you understand how to trade it, I mean, I can go back and I can show you a lot more examples on this current trade, but we're already in this trade since since around 1.7. I think around 1.7 we got into this trade. So you can see another situation right here. I think I showed you this one yesterday. See the trap, the market came back down. Where did it come back down? In this situation, came back to the bottom of the this thing. But we had a break, and remember what I told you about the test yesterday. Come back to the previous structure, gives you the test, and then it goes, it settles above the line, and then it takes off. It's the same thing. The market keeps doing the same thing over and over and over again. But there's a lot of people that still don't understand structure. If you don't understand structure as a technical trader, I think you will actually struggle to be successful at trading if you don't understand structure. Because everything revolves around structure. So this one we're still in this one as well. It's the same situation same scenario as the GBP card, where we had this market coming out of this consolidation right here. You see the trap. Like, I can go through millions of charts and I'm gonna show you this every single time. This is a trap, and the market will come back down, bottom of the channel, or middle of the box. Or middle of the box is always a decision point. Market is settling, is settling above that middle box. I wouldn't be surprised if at any moment in time we get this market, we get a huge rally. That is coming. Just mark my words. It's going to be a lot bigger than this small one, because the market is clearly settling above the box. So I'm gonna try and do a few more analysis on a few other currency pairs. So let me see if you guys have saying much on the live chat, just to. So can you teach risk management? Okay, yes, audio is fine, good. Secret patterns, please teach best. Why most traders can't make money? How manage risk and emotion? Okay, why many traders can't make money in trading? Okay, that is a very good question, but obviously a difficult question to answer, really. But obviously the most important thing, like, if you want to make money in trading, you have to go through the whole process. Like, there's no shortcut. Like, you can't just start trading and be profitable in like a year or 2 years, because trading is probably one of the hardest profession that you can ever imagine. I mean, obviously, like, even though when you hear about trading the first time, you're probably gonna think it's very easy, because come on, if someone tells you that trading is about just if you think the market is gonna go up, you buy. If you think it's gonna go down, you sell. So straight away you're gonna think to yourself, oh, so you have a 50%, there's a 50-50 chance you can either make money or lose money, right? Simply, that's what it is. That's the odds in trading. But so obviously if you're given that kind of odds, it's very easy to think that you can be successful at it. But obviously once you actually get into trading, like, the reality is, once you start trading, I mean, one of the biggest things that you know that traders kind of like, is very hard for traders to kind of control, is the emotions. I mean, there's so many things that you need to be able to be very good at in order to be successful at trading, and I'm not gonna say one is more important than the other, but definitely emotion is always gonna be at the top of the list. Money, you got the emotions, and you got money management as well. Money management is very very important, because that's what, you know, if you have a good money management, then it's very easy to control the emotions as well. And so let me just so yeah, that's the reason why most traders can't make money. It's just, it's about, you know, some, most of the time it's just about getting the right, I wouldn't say, I mean, right education. I don't want to say that simply because a lot of people are gonna think that I'm just trying to sell my courses. And to be honest with you, like when I was learning how to trade, I never paid for any courses. I never paid for any courses, but obviously it took me longer because I had to kind of research. Like even this strategy that I'm trading, I never paid anyone to teach me this strategy. This is a strategy that I stumbled upon myself, you know. And then obviously along the way, I've found a lot of things that kind of made me improve the strategy. Um, but really, it's something I had to find a way to do it myself. So yeah. So like I said, if it just depends on what you're looking. If you're really young and you got the time on your side, then it's just, you know, there's nothing wrong with, with doing your own research, teaching yourself, just, but it's gonna cost you a lot of money along the way, because you are gonna blow a lot of accounts learning how to trade. You are gonna, it's if you're willing to do it just by yourself and kind of like, you know, teach yourself, or through, making, practicing, trading, you are gonna lose a lot of money along the way. There's no secret about it. And at the end of the day, that's probably what's gonna make you a better trader, because it sounds wrong, but the thing is that you have to lose. Sometimes you have to lose money. Like, there's no, like, some people tell me, oh, they practice on a, you can never be a good trader by practicing with a demo account. It's impossible, because there's no emotions involved whatsoever. So sometimes you have to go through the pains. I mean, no pain, no gain. That's just the way it is. So if you're learning how to trade, if you're a new trader learning how to trade, if you've got time on your side, I would suggest you do your own research, and you find a way. There's so many websites that you can find so much information about trading. Even if you go on TradingView, there's so many traders that that are good there. You can you can see what they're doing. You can learn from them, and eventually you're gonna find your own way. But you have to be prepared to lose a lot of money. You have to be prepared, because that's just the reality of it. However, if you're that sort of person where you don't have time on your side, then there's nothing wrong with paying for courses, because that just shortens your time of getting there. But at the same time, you have to be careful the kind of people that you go to teach you how to trade, because there's so many people that just kind of like out there just giving, they just know the theory about trading. They're people that have never actually traded themselves. And I wouldn't want to go to someone, I wouldn't want to go and learn how to trade from someone that hasn't actually done it. I mean, that's just my preference, that's just my opinion. But obviously, there's some people that are good teachers. I'm not gonna lie, there's some that are good teachers. But the way I see it, if someone hasn't done it, if someone hasn't, like, it's impossible for you to communicate the emotions and the feelings of involved when it comes to trading, the risk management. You don't really. I mean, you just know the theory. You don't know. You've never done it. You've never been there. You haven't been there. You haven't done it. It's very impossible for you to be able to learn a lot from that person. You can learn the basics, but if you want to be successful, then you have to take it from someone who has so you have to be very careful even when it comes to, like, courses and everything to do with trading. So let me see a few more questions. How to manage risk and emotion. Create videos separated on money management and risk management properly. Can you please show where you usually take profits? I'm familiar, God bless. So in terms of taking profits, I don't really have like I said, you see the way I'm using my boxes and everything. The profit just depends on where I take my profit. Just depends on the next I wouldn't say support and resistance because I don't use support and resistance, but usually it's all to do with the structure. So in this case, for example, I wait until I see what the market does. I react based on how the market reacts. I never like kind of predict what the market is gonna do. I mean, I predict what the market is gonna do, but when it comes to taking profit, for example, I told you this is the middle line, that this is my initial profit taking position, profit taking point. However, it doesn't mean I'm gonna take my profit at that point. It just means that I will see how the market is going to react once it gets to the point, depending on what kind of structure it gives me. That's why it's important you understand structure. So depending on how the market reacts at this point, I may or may not close my position. So but obviously in terms of like looking at it overall, if I were to trade and kind of if I were to know where I'm gonna, in terms of where my profit is likely gonna be, I likely go all the way to the previous structure low. So on a short trade like this, my profit is always going to be at the bottom of this structure here. But the thing is that the market might not even get there, simply because of how important this middle line is. So you can come to this middle line, give you some kind of reversal structure, and go back up. If it does that, I would probably take a small profit or break even trade. So that's why it's important. It's very difficult for me to explain to you where I usually take, but it's usually gonna be the previous structure high or previous structure low. And obviously with advanced pattern, it's very straightforward in terms of taking profit on advanced pattern. Shabahan Batalan from India. Hi, how you doing? So I hope that explains my that explains where I take my profit. So can you create a video separate money management and risk management? But I think when it comes to money management, someone wants me to look at gold, US dollar. Okay, I'll check that out. So someone wants me to look at money management. The thing with money management, there's so many ways of looking at money management, and a lot of the time it's going to depend on the strategy that you're using. The strategy that you use it's going to dictate the kind of money management you're going to use. And so this is something that you're going to have to do a research on your strategy. That's why, I mean, if you have, what I would say, if you've been trading either demo or live account, you've been trading, and you do have a strategy that you follow and you're consistent with it, the best thing you're going to do is just link your account to my FX book, because there's so many statistics there that's going to help you in terms of deciding the money management you're going to use and everything. I know obviously when you're learning how to trade, you're going to come across people that tell you, oh, you only risk only 2%, you should only risk only 2% of your account. Now that is probably the worst advice that anyone can give you. So that's probably an example of why that person has not actually traded themselves. Because if you're gonna do that, if that's what you're gonna base your money management skills or money management plan around, then it's not gonna work for you. And the reason being, like, if I were to use that money management plan with my strategy, I wouldn't make money. I mean, I would probably make, let's say, between 25 to 30% returns in a year, probably. And that's a very, very bad return if you're using a strategy that is as effective as this. So getting your account linked with my FX book and finding important statistics that you have to pay attention from there. And one of those statistics is a statistic that tells you in terms of how accurate your entry is. So on every time you take a trade. So that's the one key thing that can determine the money management that you're gonna use. So if you have an accuracy of over, let's say, 80%, then you can be risking at least anywhere between 3 to 5 or even 7% of your account on trades that you take. But then again, that's gonna come down also to the how the frequency of your trades. So if you're the sort of person that trades 2-3 times a week, then yeah, that's perfectly acceptable. You can risk 3 to 5%, 3 even 7% of your account if you have an entry accuracy of over 80%. So So that's why it's a very difficult thing to kind of explain, like in terms of like the money management and the yeah. So maybe it's a good idea. I might make a whole video on that and obviously show you guys how to use that to statistics, but you know, using taking information from your my FX book account. But yeah, so it's very, you know, that's not something that there's a straight answer to, because you have to be able to, you know, this, you can't give a straight answer. So if anyone tells you that thing about, you know, taking risking just 2% of your account, just start running away in the opposite direction, because those people, they don't know what they're talking about. They've never traded. So someone asked me if I come here every day or it's just 1 week. Well, I don't know. It just depends on the reception that you guys give me. If you guys do like what I'm doing, then yeah, I'll try and do it for the whole week and then see what happens next week. So I'm gonna look at a few currency pairs right now for you guys, and the one I'm gonna check out gold as well. But let's start with the euro. The euro may have to go on a higher time frame. Actually, we don't, because straight away the euro, we have a potential trade here. Tell you about boxes, guys. You got the box here, and you got the trap here. Let's bring our middle line. What do you see there? You see the reaction here? The market is way below that. So we're currently getting the rally here. But you have to remember, guys, if you watch my video yesterday, we have structure here and a little structure here. So this is what this market is likely to do. Come into that structure, test, come back down. Either might give you a double bottom, might give you whatever, but you will get a retracement here before the market finally takes off. So this is a trade I will actually be taking, but only if I get this yeah. So we just have to wait and see for the reaction for how the market reacts to those two previous structure, because there will be a reaction. So don't panic. It's not going up just yet. It's not gonna do that. If it goes up just yet, if it goes up from here, it's still gonna give you another chance to enter that trade at the middle box, either breaking the middle box, settling above it, and then you take your long trade, or it can just come and, you know, come back straight back there, because we do have a structure there at the middle point of the box as well. So don't panic. But euro is going to be a good long trade. It's going to be a good long trade coming on the euro. But let me try and see this on a much higher time frame, and see where the direction of the market is going. Let's go on the daily. So on the daily chart, you can see what the market is doing. So we had this channel, yeah, and what do you see? This strategy. I want to tell you about this strategy working on every single time frame. This is what I mean. So you got the channel here, you got the break, so you got the trap here. This is a trap here. So what did the market do? The market comes back to the previous structure low. Traps a lot of traders that, you know, the market is going long, but it never goes long, does it? Comes back down to the previous structure. Now we got a move back up, and so we're getting a kind of a pullback here. This is likely going to give us a nice correction here, but it's going to be a long trade here. There's going to be a very, very long term trade coming on the euro. So that's why you use your lower time frame to kind of get any entry. So any entry we get for a long, we're going to be taking it. And like I said already, I've already pointed one out. You showed you the analysis. So, but it's not ready to go yet. This is not ready to go. There's no point in panicking or anything. Wait until every single box has been ticked. That's why patience is very important in trading. You wait for the boxes to be ticked, and then you take your trade. There's no point, there's no panic in here. When the market is ready to go, it's gonna complete all those times for you before it goes. So moving on to pound. Look at the pound as well. Bitcoin, I'm gonna look at Bitcoin, don't worry. Shubham, I'll look at Bitcoin. Yeah, I'll look at a few currency pairs, don't worry about that. So looking at the pound, I look at the short term and the long term trade. So the pound is in the process of making that consolidation, right? We're going to a channel consolidation right there. This one, they usually break to the upside. They usually break in the direction of the trend. So if we put in our box here, so nothing has happened here until this market comes in and break this previous structure. Then you can't really, you know, but the way it is right now, I wouldn't be surprised if we get a I won't be surprised if we get an up move. Very soon we're gonna get an up move, but it's not a move that you want to be in, because that's gonna be the trap. Don't stay in that move. So wait for a pullback, either to the previous structure resistance, middle point of the box, or all the way to down to the bottom here before the market rallies. Wait for that. It's coming. So looking at this on a higher time frame, short term you got a long trade on the pound. Short term on the euro as well, you got a long trade. So the pound and the euro, short term you're getting a long trade setup. So higher time frame on the pound. Okay, we had this huge bearish move. So just like the euro as well, we're getting a huge rally. But what you're gonna pay attention to right here, guys, is this here. You see this channel right here at the top there? You got your trap there. So just the long term plan there. I'm just showing you guys both the short term and the long term. So in short term we had a nice long trade setup, and on the long term this is what you're looking at. So you see how sometimes the market can go really deep. You know, that's why it's never a good idea to even buy at the bottom. You always have to wait for a sign. If you don't wait for a sign, you're literally, you know, putting yourself in you know, subjecting yourself to unnecessary emotions in trading. So yeah. So this, I see this coming back up to at least the previous structure here. Getting to this previous structure is going to give you a sign of what the market is going to do. So that's something you shouldn't do. Don't be looking to kind of like, you know, so if you're going to take the long trade from here, obviously, you know, subject to all the conditions being met, then if you take a long trade here, you'll be very cautious of paying attention to this previous structure. Or the middle line of the box. So it's not like, you know, to take your profits when the market get there. It's just about being cautious, because guys, you always have to let your profit run. You always have to do that. If you're you know, quick to take your profits, you know, you could be in a situation where you buy this market here, right? The market rallies, goes all the way there, you take your profit, and then the market kind of give you a little pullback here, and then boom, it takes off, and you're gonna be there really like, it's gonna, you know, there's this saying in trading that missing out on a good trade is just as, you know, it's the same as being on the bad side of a trade. So if you're in a good trade, you need to be able to stay in it until something changes, until the market gives you a sign. You have to stay in it. But anyway, that's the 4-hour time frame. Let's see on the daily time frame if there's anything. Same again, guys. I mean, this it's sometimes when I just look at the charts, I mean, it doesn't matter which time frame I'm looking at. it doesn't matter, because what we're having here, guys, 1 2 3, we got a trap here, right? Because we've clearly broken that previous structure. Market rallies back down to the previous structure, and now we're getting a rally. So long term of the pound, you're going to be getting a huge rally on the, on the, I wouldn't say huge rally, but a long term view, the pound is going to go up, because it's already completed all the things it needs to do in terms of, like, breaking structure, coming back to the previous structure. So if you're a long-term trader, you would be long on the pound, you'd be long on the euros as well. So let's have a look at the dollar yen, and obviously we're gonna look at the gold as well. So let me just put the gold, take it up a little bit. I'll look at the dollar yen, I'll look at the US dollar CAD. I looked at the euro, dollar Swiss franc, and yeah, and then that will be the end of it. So let me see if you guys have had any. My live trade is running. Please, Nasdaq, buy just a few seconds. Say something. Nasdaq. Let me have a look at Nasdaq. You're in a buy trade on the Nasdaq. Where is the Nasdaq? Nasdaq is right here. I'm assuming you're on the 50-minute time frame. Ooh. I wouldn't be long on this on Nasdaq if I were you. So if you're in profit, just move it to break even, because let me tell you what this market is likely to do, because we're just about 20 minutes from the New York Open, and the market usually reverses when the New York Open opens. The stock market gives you a little reversal. So this you're seeing is just a pre-market thing that the market is giving you this small rally. It's likely going to reverse once New York opens at 2:30. So if you're in a long trade, just move your stop loss to break even, and if it goes a little higher, then good for you. But you don't want to be a situation like the market will come back to that middle point, because this is still a trap, and the reason why you're getting this little reaction is probably because of this structure here. So you had a previous structure here, the market come into that structure. The market always respects structure, but it doesn't mean it's gonna just completely bounce and go up. If you're lucky, it might go all the way to the top here, but all this is still gonna be a pattern that will come back down to the middle point at least, before it goes up. So if you're in the trade, just say move your stops to break even, and just be cautious, because once New York opens, this market could just reverse completely. So I hope that answers your question on Nasdaq. So yeah, just protect yourself, because like I said, the market is likely to go back to the middle line. So we're gonna go on to the dollar yen. So dollar yen, as you can see, I've already got a line on my chart. We're getting a sell setup on the dollar yen, so the market is likely gonna give us a sell setup. So looking at this on a higher time frame, I think I posted an analysis on this on TradingView where it said the market breaks above that trend line, look for buy setup. We never got the break above the trend line, but we're getting a very good sell setup here. So this is a nice sell setup that will take us down. We're probably gonna go a lot further down. Yeah, I was expecting us to at least break the top of that previous structure, but obviously the market doesn't do that all the time, because this is likely going to be somewhere we're getting a reaction, because we're somewhere along the middle box of this huge consolidation. So let's see. I'm actually gonna put the box from there. So exactly. So you see where we're at right now. The market is settling below that box. So the dollar yen is going to be a very good good sell trade. Yeah, that's going to be a very good sell trade to go to at least this trend line right here. So if you're looking to take a trade, the dollar yen is a short. The pound yen, the pound dollar, and the euro dollar, they're all long trades. So any opportunity you get to buy those trades, you take it. So we're looking at the Canada now, dollar CAD. So dollar CAD, like I said, I posted this analysis on TradingView a while back here, where I said look for a long all the way up to this trend line and then see what the market does. So as you can see, the market is clearly creeping up to the. So this is a totally different strategy. This is like this is a wave analysis strategy where we had the ABC correction. So we'll see what the market does once it gets to that trend line. We could get a fifth wave down, but I think we will break above that trend line. That's why the Canada is going to be. The Canadian dollar is going to be very weak in the coming few weeks. That's why the euro CAD trade and the pound CAD trade are good trades. But yeah, so moving on to I'll do a couple more, and then we can call it a day. I promise you, I kill these emotions one day. Well, I hope you do. I hope you do. So Euro New Zealand dollar, Euro New Zealand dollar, we're getting a very good buy setup. You can see all this will always break to the upside. As you can see, the market has already clearly broken it. So Euro New Zealand is a very good long trade as well. So we'll see where this one is going to go to. I might be posting a couple of these on TradingView with a more detailed analysis on them as well. And then yeah, so gold, we're clearly getting a buy setup. So if you try to look at this as the first mini box here, and you got your middle line here. So this whole structure is a buy setup. However, you don't buy it unless the market comes back above the middle line. So if the market gives you something like this above that middle line and it settles a little bit, then go for it. This is going to be a very good long trade on the gold. Looking at it on the long term, on the higher time frame, same situation that we're getting. So we're getting a long trade, but also you have to be very careful, because this is, you got a 1 2 3 here, and you got a break of structure, and the market is currently at the middle line. So preferably you want to wait for this market to break above the middle line to give you a very good buy setup to the upside. So yeah, gold is going to be a long trade as well. But obviously, like I said, this whole pattern, the 1 2 3 and the break to the downside, is usually a trade that will end up going to the downside. So you have to be very cautious. Wait for a more clear signal, because at this point in time the market is giving you a buy signal, but then it's clearly below the middle line of the box. So this is something you just need to stay out and wait until the market gives you a more clear signal. But obviously I would expect the market to go down really. So yeah, so keep an eye on that one. Short term, obviously you do have a potential long trade on that one, but long time you have to be very cautious. Dollar Swiss franc. Well, this is the opposite of the euro, isn't it? So if we're going long on the euro, this was usually going to be a short trade. So looking at this on a higher time frame, look at this consolidation that this market is on consolidation. So I wouldn't be surprised if you get another move to the downside. So there's probably no direction on this unless it breaks out of this whole consolidation. So looking at on a higher time frame, it's more like in a proper consolidation. but we are likely to get a move down because the euro and the pound are going up, and the fact that we had this previous structure here, you can see the market is clearly broken below. Now it's testing that structure, so I will not be surprised if we creep in a little bit down. So yeah, I think that's it for now. Let's check how our trade is doing. I don't think we have got any movement yet. Like I said, the market is yeah. So the New York Open, once the New York Open, we're gonna get that reversal, because this will reverse, and then once it gets to the middle, now we'll decide what to do with the trade. So I'll see if I can take any more. If you have any more of your questions, then put them through, or else that's gonna be it for today, I think. Yeah. So I'll wait a couple minutes for your this is thank you so much, sir. Your life is such a help. Well, thank you, Shubham. I'm happy that you enjoyed the analysis, and yeah. So I'll see if I can keep it going tomorrow again. But yeah. So all I can say is thank you guys for tuning in, and yeah, I'll try to give you another one tomorrow. Hopefully it's going to be a lot earlier than it is today. So yeah, so thank you guys for watching, and hopefully I'll see you guys tomorrow.